I think investors really appreciate the success of the strategy and hitting record results with $237 million of revenue, up 74% in our fourth quarter of consecutive positive EBITDA. But the fact that the student loan moratorium, which was supposed to end on September 30th of this year, got pushed back until January 31st of 2022, that caused us not to raise our full year guidance. We've been guiding to $980 million of revenue since January, and we've beaten both the first and second quarter. So I think people wanted to see us raise the estimate again, but we will lose about $40 million of revenue in the back half of the year that will push into next year because of that delay. But the rest of our business is strong enough to offset that, just not enough for us to raise estimates at this time. And so I think that was one factor. And then also, when you become a public company, that first quarter that you report, there's a lot of costs associated with the transaction, as well as some non-cash charges that impact the reported EPS number. So I think there's some confusion around the reported number, but we want to maximize value for shareholders and execute on our strategy, and that's delivering record results and accelerating growth.
SoFi has such an interesting and unique view into the health of consumers and students, and I'm so curious, going into lockdown, then out of lockdown, now maybe back into lockdown, how would you gauge the health of consumers, the economic stability of consumers right now?
I would say the stability is really strong. We see spending trends continue to be relatively stable. We're benefiting from faster growth than just spending trends because people are switching their payments from physical to digital, and they're doing more at-home banking, especially on the back of COVID, and realizing they can do everything from their mobile phone at SoFi. So we're benefiting from a secular transition from physical banking to digital, which is allowing us to grow much faster than the overall economy. I think investors are much more aware of the fact that to achieve financial independence, to reach their goals, they have to invest early. And so we're seeing great tailwinds behind SoFi Invest and people investing in robo accounts as well as single stocks and ETFs. So the behavior has been quite positive, and the awareness and access to investing has become a lot more plentiful.
On that note, both SoFi and Robinhood are targeting new investors with less experience for these investment products. How much progress are you making winning customers that you think would otherwise go to Robinhood? What's the hard sell?
We're making great progress. We had over 200% year-over-year growth in total accounts exceeding 1 million for the first time. Our invest product is very different. So we pioneered fractional shares. We do not charge for fractional shares. We do not charge for single stocks. We have 6 of our own SoFi ETFs that are uniquely created for millennials and Gen Z. We also offer 6 robo accounts, auto investing, and then cryptocurrency.
There's a lot of talk about gaming replacing day trading when it comes to the attention of young people and the pandemic and the way they spend that attention on their mobile devices. How do you see that playing out?
Yeah, our investors are really taking a long-term view. The behavior that we see on a platform is about investing in dollar cost averaging. We're seeing a significant increase in recurring investments being set up, and we've created price points that allow people to diversify more easily. We have 2 ETFs that offer 500 stocks in the ETF, and those are at $10 price points. The day trading that other platforms are experiencing, we just don't see those statistics on our platform. From a regulatory standpoint, if someone does drive the behavior of a day trader, you have to block their account. And so we're monitoring trading all the time. We have very low incidence of the number of people that are doing 3 or more trades in a given day. It's less than 1% of our accounts have more than 3 trades in one day.
Meantime, I'd love to hear where your crypto offerings are going. You're offering crypto rewards for credit offerings. What are the next advancements in crypto for SoFi?
We continue to hear from investors. They want more and more selection in alternative asset classes besides stocks. And one of the things we did was added an ETF called TGIF. It's a fixed income ETF that pays a dividend every Friday. In addition to that, we heard that they wanted more selection within cryptocurrency. We originally offered Bitcoin and Ethereum and Litecoin, and we just added 16 new coins, including Dogecoin. So we want to give them the best selection they could have, and we continue to listen to what they're looking for. So we're evaluating other alternative asset classes beyond cryptocurrency and robo and single stocks, looking at things like NFTs and also looking at other asset classes like real estate and private equity. Those have different requirements from a sophistication standpoint and qualified investor standpoint, but we want to continue to expand the selection.
And how do you see the uptake in your IPO product going?
The demand for the IPO product broadly across the industry from retail is very high. It's not a product that Main Street has typically had access to at IPO prices. And so we've done 5 total IPOs so far, and we look for continued opportunities to bring that unique selection to our members as well. It's definitely something that we know our members want and something they haven't had access to in the past.
How are you thinking about the return to the office right now? What's the policy? Are you experimenting, or are you going to be changing some of your workforce policies for good?
From a long-term standpoint, we did change our policy for good. We're allowing each individual employee to talk to their manager about their workplace, whether it's one of our 10 offices throughout the United States, LATAM or Hong Kong, or their home. And so we added the home as a potential work office place for them. And it's up to them to work with their manager on making the decision on, do they work from home? Do they work from the office? Do they have a hybrid approach? In the near term, we're putting the health and safety of our employees first and foremost. We originally had planned to come back to work in October for those that will work in the workplace. We're going to delay that now to later in the year, just given the significant increase we've seen in COVID cases tied to the Delta variant. And we're experiencing that firsthand with friends and family, and it's a real risk. So we're going to delay the return to the workplace. We've had a phenomenal year and a half despite the challenges of the pandemic and all the destruction it's created in individuals' lives. The company's performed quite remarkably with a lot of milestones. So we're perfectly comfortable working from home if that continues for the foreseeable future.